Alright, I'm going to do a quick run through on how the CMI works. This is the new CMI video. Now, you can read the CMI, or you can take the tags. You can see right here where this divergence was, these dotted lines, right? It's connecting these two peaks. These peaks are going down. If you look at the same peaks on price, they go up. That's where you get your divergence. That's where the move comes in. These tags are reading that. There's more to it with these light tags. Light tags are where price is leading. So this is moving up all of a sudden right here on this. Right? But if you look down here and you zoom in, so from here to here, the CMI went down, but price went up. Right? So price went up, formed a pivot. So this is price leading divergence. Right? It's going the opposite. It's saying the opposite of what the CMI is saying. It's saying that, yeah, the CMI is bearish, but right now price isn't listening. That's what the light tags say. The light tags say it's bearish, but price isn't listening. Very often, it's moving in the direction of those tags, right? It's moving in the direction of these green tags. It's just a scalp within the trend. Right? Scalp within the trend. Sometimes it's too small to really take, especially on the 15. But these dark tags are real divergences, and those you can definitely take. Now, if you look on the 5, you can see more tags. You get some dark small tags. So the small is over a small area of a divergence. It can't be a big divergence because this trend here, these candles being too low, is what blocks it from seeing a big divergence. You can't have a candle that's lower within like 20 candles, I think it is, in order to have a big divergence, which is the original divergences. This one and this one. These would be the originals where it's big. Those are the only ones you would get in the original CMI. Then I found these, the small ones, so it's within a small time frame you can get these divergences. And those usually react fairly quickly, you know. And then these scalps, which are price leading divergence. So in an attempt to find when you're in a trend, right? So like right here, where you're trending up, throughout this whole time, right? These green tags are entries into the trend. Your buy points to buy and hold while you're uptrending. Right? You got nothing really coming down on you on the top. Regular CMI divergence where CMI turns over and starts heading down right before price does. You can see that right here. So you can see right here in this bar, right next to each other. But you look here in the CMI, big drop. Right? So this big drop is saying, nope, the market started dropping on the 15-minute bar, right? But and it should. So as it's going down, boom, this goes down, this goes down too. You're watching it just go down and down and down. Then it goes through here, and it goes down and down. And finally it gets here and it turns around. You get this scalp tag, and that's when you can get out. You can get back long, and then you hold your long. You know, you gotta try and ignore some of these throughout this. That's a good tag, 90% and 0. But whenever you're uptrending, you have to realize that you're uptrending and just be taking these tags. See right here where you're just uptrending, you're above the green, you touch the green, and you come back up, you're just uptrending. Here is where you're kind of all wishy-washy, and then here kind of switches. This is a good trend line from the nothing levels. Good combination. You know, you can see when you're trending up. and you just want to listen to these green tags. So that's the whole point of the new tags. That's what the new tags are trying to do. Now, as far as the way they're scored, you've got simple scalp, you've got 1 plus, 2 plus, 3 plus, 4 plus. These are just how close the divergence is, measuring, basically. I come up with basically 5 new divergence types, and that's all 5 put together into one so that it's not so many words. At the balance, the best, it's all that. Trying to eliminate so much confusion. I'm still working on this. I don't know. It's still a little confusing. I don't know exactly how to label these things to really, because it's not really scalp. Price leading divergence, and the dark tags are CMI leading divergence. But all that is too much to put in a tag. So I don't know. And then the other additions, you've got your scoring. So right here you've got M 1.4. That's your magnitude of the angle. You've got D, which is the deviation bands. So right here, this first deviation, second, and third. So that tells you which deviation band it's in. It's just in the 0 right now. It's not very oversold or overbought. Breadth is how much of the 10 instruments in the CMI are participating. Right? There's 10 instruments that make up the CMI. In this move, 70% of them are participating. Now, P of 0 is how far off the peak the ADX levels are, which is basically a trend filter, so it's off the peak of the trend. So when this hits 0, you're totally off the peak of the trend, and those make the best turnarounds. 2%, 1 to 2%, and the P are good. Anything above that really doesn't matter. Breadth, I mean, any number can be good. You want to see 60, 70, 80, 90%. 40, 50% isn't bad, especially if you've got other decent numbers. I mean, with this, you've got a magnitude of 2.6, which isn't bad. 3 to 5 is what I look for a decent number. D of 1, not bad. I look for 2 to 3, but you know, then breadth 50, look for 60 or 70. P, I look for 0, you know. So none of these numbers quite get there, but all of them are like right on the border. So it's a decent tag, you know. This one has the 0 and the 70%. That makes it a good tag. This one, the P levels are low. Breadth is awesome at 80%. Your Big Bear has a good magnitude, 3.5, with the 80%. So not bad. You know, it's not off the trend level, not off the peak of the trend, but fine. It's kind of lower numbers at least. But either way, you get a big and a small. So 2 tags put together. You have these tags stacked. That means 2 fired on the same bar. So you've got this one firing within this bar right here. And you've got this one firing within this bar right here. So it's reading both this moving up, this moving down, and it's reading this moving down, while this is moving up. So you've got 2 ups, 2 downs, and the CMI. And that's a good tag, you know? So this is what you're looking for, this is what you're taking. Taking every one of these tags? Probably not. You know, it's too many tags to take. You're watching for a lot of them. You can kind of combine tags within your head and kind of stretch them out and kind of look lower. So like if you're trading this right, you know, you're taking 1 micro on this scalp somewhere down here, you know, to give it room because it's New York Open. Then it comes down, you get this another tag here, you take maybe another contract in here, right? And then it comes up, you get this tag at the nothing level. That's a good tag. You get out, you reverse, you go short. You probably take your profits here. I mean, this looks like you're hitting off the trend line. You got the main pivot level, you know, or you could take profit down here where the previous level, yes. Any of that works. And then you know, you take this one up here, and then I get the scalp. I'd start trailing close, but I wouldn't have got hit until here. And then you get this green tag too, small divergence tag. Terrible numbers. Often the under tags have terrible numbers, like the P number, but it's fine. You know, the under tags. Then you get, so you can get long off of this, get out of your short cover, get long off of this. You set your stop somewhere down here, and you have one, and then you could add into one when this comes back up, add into another, and then you get this move up. You know, get out. And if you don't, when you get this tag, then you get out. And you could take this tag down too. You gotta be quick. I mean, this is a quick 5-minute move. And then I think we got some news or something that pop back. But if you do, you still have this divergence working. So you get this divergence tag, and that's an easy one to take, and then trail on. And then these ones you don't want to take because these are against the trend. The top ones, when it's uptrending, you don't want to take them. When it's downtrending, you don't want to take the bottom ones, right? Until maybe you get small and big. Like when you start seeing them stack up like this. Alright, now you can take it. You can wait for the divergences to build, like it did here. You get a couple tags. Here, you get a couple tags. When it slams up hard, you get a tag, you can take it. Hard, you get this nice rollover right here. You can take that. And then this one with the double tag, you definitely take. This one's a little harder. It's also right at 11:30. I like 11:30 call shorts. So that's basically the tags. You can float over, you can get these. Now, some of the settings here. So, well, also you get the live CMI. That's telling you, that's looking at this right here, and it's checking this pivot. Hide all pivots. You can show them all. You can hide the ones on Priceline, the ones on CMI, whatever makes it easier for you. These dots line up, and then that's what the CMI is, connecting and checking. Connect these. Okay. So that's what's checking. This pink one's higher, and this yellow goes down. Pink one's down, yellow one goes up. That's all I'm looking at. All this is checking right here. Boom, boom, same here. Boom, boom. That's your small divergence. The big divergence is checking these peaks across here. Checking these peaks across here. Right? This one ended up moving up a little bit, moving down a little bit. This one's a little higher, right, than this point. It's a little higher. So when it checks this one, it moved down, this moved down. Levels, so it didn't tag it, but I would still see this as a big divergence, which is why I would have taken this. Pretty sure I did take this one. Because I can see these peaks are lower, and these peaks are even at best. So, then you've got a small divergence here happening. CMI roll over first. So, that's what I'm looking for. Alright, now live, what I was originally saying was the live CMI is checking this pivot versus this pivot, and this versus this. Right? So right now they're about even. Down here, it's higher. So I get bullish. Momentum is the momentum of the CMI. The faster it's moving up, down right here, you would have gotten big down momentum. Right here, you get big up momentum. Here probably medium. 2. Probably 1. Here neutral. That's the momentum of the movement of the market. Right, so it's the momentum of the overall markets. Then you've got overbought and oversold, which is just how far it's coming out of these red bands. So that's how far overbought and oversold the markets overall are. And that takes off all your tags. You can click only confirm tags. That won't make them so those ones that pop up and disappear won't pop up and disappear. They'll only pop up when they won't disappear anymore. Problem is you get later tags. I like getting the early tags, so I don't keep this. If you find yourself taking tags that disappear and it's bothering you, you can click confirm tag. The tiny tag mode works great for cell phones or people who don't want as much clutter, but you can also take off tiny tag mode and get the full words. I kind of like keeping the tiny tag mode on. Either way, when you float over, you can get the details. The uh, tag distance from candles. You can stagger them, avoid overlap. So this is like space them apart so you can see them, which doesn't really, but that was an attempt to stagger them. You can put them far off of the candles, or farther off the candles, and this will raise them up or down even more. So you can put it way off the candles. Problem is this, they're getting too far away. You can't see them, so personally, I like them normal, 801, and that's pretty much it. You can hide the scalp tags. This will take away all your light green tags and only give you your dark green tags. You can hide your oversold and overbought tags. That's going to take away your yellow tags that aren't really divergences. Don't mess with any of this. The things, these are the instruments that makes up the CMI. Your deviation bands, you have 4 of them. Your 0, your 1, your 2, your 3, your 4 outside. So this just shows this is the original divergences. So it would show the original tag. A lot of extra settings basically in here now. I should say big divergences, I guess, but that's pretty much taken out with it. So, block pairing. So this blocks the pairing across the futures open and close. These diagonal composite lines is what draws these diagonal lines connecting these points. This dotted line right here. You can take those off if you want. I put them on. I had Gritty put them on actually to try and you know, visualize the points it was connecting. I wanted to connect up here as well, but yeah. Price chart levels, that is these dotted lines here. These are the ones that are support and resistance. And I like to keep them on, but you can take them off if you want. I would suggest keeping them on and keeping max levels to 1 or 2. Honestly, 1 is probably good. I don't mind 2, but so divergence, less levels on price chart. So that's how you can turn them off just on the price chart. Show them in the CMI pane, so you can turn them on in the CMI pane. You can turn them off here, turn them on here, and off here. This would be another option. I should mention this. Camo. If you watch this video camo though, you can do it like this. So you have your scalp tags that pop up on your CMI, and you still have your price. Nice clean action. Think of that. That is an option I had made before. So that is, where was it? Right here. So I like to show them on the price charts. You can show them in my opinion. Or you can put them in both. This will hide all pivot markers, top and bottom. This will hide them just on top. This will hide them just on the bottom. You can also space them apart. So some of these are stacked and there's multiple colors on top. So you can space them up off of the bars, handlebars, and off of themselves. So you can see the different colors if you want. So you get 3 dots on this pivot point, 2 on this pivot, 3 on this. Even this can be a good signal. When you get 2 pivot point dots, that means you got the CMI and price pivoting at the same point. So there's no divergence here, and you're not going to get a tag, but this is convergence of it moving lower. It's a decent move, you know what I mean? Same here. You've got 2. You've got where, and this was a high. And this was a low with a high matchup, but it works. A stronger pivot point, basically, when you got more tags. Does it always work? No. Just like the tag, it always works. Right here, same thing. Boom, pivot points up. Pivot points can be helpful too. I personally like keeping it pretty close to the buffers if I have them on at all. That way you can actually see what's up or down. Right, so like you can see that these are moving up and these are moving down. You can change the colors of the pivots. This was the original bounce divergence, which is now scalp 2. You can turn off those. You can turn off specific scalps as well. There's the settings. Each of these have different settings. That's why they are what they are. Regular divergence settings. Because I have different settings for them. That's where it's rating and checking. CMI pivots. Best. So this was my original best divergence, and the original upgrade, it's now plus 3s. So those are pretty good. You know, the bestest was also best. I don't think anybody really got this, but this is within 2 bars. This is within 1 bar. So the 4 plus is happening within 1 bar, and the 3 plus is happening within 2 bars. The 2 plus is happening within 5 bars. Okay. The regular scalp is a cross divergence from price action, CMI, within 5 bars. These are weird ones because they're cross divergences, which is why they are the lowest of the tags. They don't always work out very well, so you can block those. You can block the plus ones, the 1 pluses. These are I don't remember what these are. 1 pluses can work though. Looks like it's price leading divergence within 8 bars or so. So here you can set inline always visible. If you have tiny if you have tiny tags on, it won't show. But if you turn off tiny tags, then you turn on details inline, always visible. You can see the scores for all of them all the time. It can be a bit too much, especially if you're on mobile. But you can go through, especially if you're testing, and view which scores work best. Which scores did you like? What do you see? I see D3, only 10%, shitty all the way, but you got high volume.